One of the funniest things I've seen you write about recently is this Pringles competition that you had with Logan. Is that your daily dirt nap intern?
Yeah, Logan Miller is my daily dirt nap intern, and just as a goof, I bet him that he could not eat 5 cans of Pringles in a day. And he's like, "Oh my God, that's the easiest thing in the world. I can totally eat 5 cans of Pringles." I said, "Okay, I'll bet you $100, but if you lose, you only have to pay me $20." And he made it through 2.5 cans of Pringles, and he hit the wall, and he was done. It's a lot harder than it looks. It's a lot harder than it looks.
Do you mind if I put up that Vince McMahon meme you made for Dirt Nap, just for people who are watching?
Oh, sure. Go ahead.
I'm going to splice that in. That's hilarious. So today, let's talk crypto, AI, and Google. What are your thoughts basically right now on Cryptomania? Has sentiment kind of reached stupid levels at this point? I've seen you've been calling out some of these crypto bros. Like you said, they all have beer muscles right now, and they're sitting in their garage building model airplanes and drinking Mountain Dew. Shots fired.
Yeah. So I got into, I wouldn't even say it was an interaction because I didn't say anything, but I had this guy on Twitter who was telling me that I should put Bitcoin in the Awesome portfolio. So the guy actually did the math. He had some kind of risk management software, and he showed that if you have 5% Bitcoin and 19% everything else, then the Sharpe ratio of the portfolio actually goes up, which he was saying reduces your stress, right? Well, if you have an asset that goes up 1,000,000%, obviously the Sharpe ratio is going to be really good no matter how volatile it is, and the Sharpe ratio of the portfolio is going to be better. But the Sharpe isn't what makes it a stress-free portfolio. It's not only would you be adding to volatility, you would be adding to volatility in absolute terms if you added Bitcoin. And also, you would have another asset in the portfolio that moves around a lot. So if you have stocks, bonds, gold, cash, and real estate, and these things move around with like a 12 realized vol, and then you have Bitcoin, which has 120 realized vol, what are you going to be staring at all the time? You're going to be staring at Bitcoin. And you're going to be checking your phone every 5 or 10 minutes, and it's going to cause you stress, which is the opposite of what the Awesome portfolio is about. So the Awesome portfolio is about taking 5 things that are not very correlated with each other and putting them together to minimize volatility. But the 5 components in and of themselves have to have low volatility. And out of those 5 things, I would say stocks or real estate probably have the highest volatility. But you don't want a portfolio that you're going to be staring at all the time. And I assure you, if you have Bitcoin in your portfolio, what is the one thing that you're going to look at? It's Bitcoin.
Yeah, definitely. So do you follow some of these AI cryptos? Like, for example, Singularity Net, AGIX. I guess it's like a decentralized platform that sort of aims to democratize access to AI services.
I don't know that any of these things actually do anything. I mean, if you look at coinmarketcap.com and you click on it, it tells you the description. But I don't really know that any of these things really serve a purpose. Like if I'm going to invest in AI, which I'm not, but pretend that I was, I would buy Microsoft or I would buy Nvidia or something like that. Like I wouldn't buy some crappy token that I don't really know what it does. It has AI in the name, so people are buying it up. But this is not what sophisticated investors do. You know.
You retweeted something here about the basketball highlight NFT people are back. That's actually kind of hilarious because when NBA Top Shot launched, I got in on it, but I didn't like buy anything from the marketplace. I more so kind of got in on, I guess you'd call them like raffles. So if you get in the queue, they give you like a pack of cards for, the top 50,000 people who get in. So I got a bunch of free Top Shot like NFTs and then flipped them for $1,500 and then realized how stupid it was and instantly got out. So I didn't know that that was still an active thing.
I didn't realize that either. The guy that tweeted that, it's an anonymous account. His name is Fed Speak. He's one of my favorite accounts on Twitter. And I mean, this kind of shows you where we are in the cycle. Like all the stupid stuff is coming back. Basketball highlight NFTs, rock NFTs, stuff like that. Like it's, I mean, one of the things you said in the beginning was sort of like where we are in the cycle. Like, am I bearish on crypto? I'm not necessarily bearish on crypto. Like I think all of this is very stupid, but since the ETFs were launched, since the Bitcoin ETFs were launched, you've managed to securitize this asset that was difficult to trade, and now they've gotten billions of dollars of flows since the launch, and there's really no sign of that stopping. And a lot of these Bitcoin ETFs are not even approved on a bunch of platforms yet. Like we're still in the early adoption phase. So, like I said, even though I think all this stuff is really dumb, I think we're probably not close to the end yet.
Interesting. So what are you bullish on right now? I mean, is gold, obviously gold's probably on your radar. Any other broader ideas that you're looking at?
I'm really starting to warm up to dividend stocks. The dividend factor was the worst performing factor in 2023. And I mean, I like dividends in general. I love stocks that pay dividends. One stock that I do have is Philip Morris, which pays about a 6% dividend. And the cool thing about Philip Morris is it's also a growth story. But, yep, and there you go, Zin, yep. But I think it's very possible that we should have some rotation in factors, and I think I would much rather be in the factor that is out of favor, which is dividends, than being in momentum or something like that.
All right, let's transition a little more into like AI and Google. You have mentioned that AI is about to enter the valley of despair. Do you attribute that more so to kind of like the popular language models like ChatGPT and then like Google's Gemini, or have you seen some of this other stuff with, the text to video models that OpenAI is using? It's called Sora.
I haven't even seen that. No, I'm really referring to the idea that anytime a new technology is developed, there's an initial hype phase where there's a lot of money that pours into the space and you have a lot of overinvestment and malinvestment. And then you enter the valley of despair, which is a period of time that could take 3 to 10 years when you have a bear market on the investment side. But that's really when all the technological progress is made. And then 3 to 10 years from now, you have a second bull market, which is actually bigger than the first. So I think we're pretty close to completing the run-up in AI, the initial run-up. That's been a big gold rush, and I think things are about to get hard pretty soon.
Do you think AI is going to offer more solutions for people, or do you look at it as more like an existential dread kind of thing? Because I'm kind of in that second camp, which I know a lot of people we work with really, really, really love AI and some of the tools it has out there. But from what I've messed around with, it's kind of bullshit right now. And like I was saying with this text to video thing, I do not feel good about it for a number of reasons. I think it's going to displace a lot of workers, especially people who, rent out drones and provide stock footage and stuff like that.
Well, I think the potential of AI is going to be realized in ways that we don't fully understand, and I think the use cases that people are using for it right now are probably not going to be the best use cases. I'm not an expert on this, but I've heard that AI has a lot of applications in medicine, in terms of diagnostics and stuff like that. I think that's a very interesting use case. But outside of getting college students to write papers, it doesn't really, the language models of ChatGPT and the other AI they don't really have a lot of applicability right now. So, Stephen McBride, one thing that he says is that AI today is as bad as it's ever going to be. It's only going to get better. And I absolutely believe that. And everybody can see the potential of this. But like I said, right now, things are going to start to get hard.
Yeah, and I'm going to put some video clips of Sora up on the screen for viewers that are watching. Just to reiterate that, I mean, they already look pretty good, which is kind of scary. And like you said, it's the beginning stages. It's only going to get better. So let's transition to Google a little bit. You are pretty bearish on Google right now, right? You've got puts.
Yeah, I got some puts on Google. That's right.
What are the factors kind of driving your thesis on the company and the stock moving forward? Does Gemini play a big role in that?
Oh yeah, absolutely. Like I've been kind of negative on Google for a while. I was just kind of waiting for an excuse to get short. Google is not fundamentally different from when it was launched in 2004. They make 50 billion a quarter on search. They make 10 billion a quarter on cloud, and they make 10 billion a quarter on YouTube. But the margins at YouTube are basically zero. The margins at cloud are very low. Really, the big margins are at search, so they're still essentially getting most of their profits from search. In spite of Google Ventures and Google X, they haven't really done anything of significance in the last 10 or 12 years. So, this is a company with 182,000 employees that is ripe for disruption. And the thing that I was looking for all along was some kind of sign that Google might lose market share in search. And I think that Gemini might actually be that sign, right? Because if you think about it, Gemini was a disaster. It's this, so-called woke AI engine that's returning ridiculous results of pictures of the founding fathers and stuff like that. And what that really does is it has the effect of lowering people's trust in the search engine, right? If people believe that if they search for something, they're going to get results that are skewed or biased, then they're gonna choose a different search engine. And there are alternatives, right? There's Microsoft, there's DuckDuckGo, there's other places to go. So that's really the thesis, that this will lead to a loss of trust in Google over time, and they will lose market share in search. And I think it's going to happen.
Based on what you've seen, do you think some of the other language models have the same sort of biases that Gemini has?
Nowhere near to that extent.
Really?
No, not even close. Yeah.
Let's wrap it up here with Nvidia. We talked a little bit about on the AMA we recently had on the Jared Dillian money community, but where do you see the stock going from here? I mean, there's a ton of hype around it. Do you see a pullback coming? Do you see it continuing to skyrocket? What are your thoughts kind of on Nvidia right now?
I don't have any thoughts. This falls into the category of stuff you put in the too hard pile. It's too hard. I guess with a gun to my head, I would rather be short than long. Stock is starting to act a little funny around here, but I'm not in the business of shorting stocks that have gone up 1,000% because they could easily go up another 1,000%. It's too dangerous. So I think Nvidia is more important from its symbolism and what it symbolizes. And Nvidia symbolizes tech and AI and growth and everything that the market has been about over the last couple of years. And if it fails, then that is the end of the tech and growth and AI trade. Okay. So then if it does fail, if it goes down 25 or 30% from here, then you have your answer. Then you know what to do, which gets back to what I was talking about earlier with dividends being a factor, right? So I don't really look at it as something to trade. I look at it as an indicator of what to do next.
Right. Actually, just kidding. Let's talk the election a little bit. How do you see this election? How do you see this playing out in terms of who could get elected here this year and how it impacts markets?
I mean, speaking from somebody who's totally unbiased and doesn't vote ever and is not going to vote this year, I think if the election were held today, I think Trump would win. And I think it's looking pretty favorable for him to win in November. But a lot of things can change between now and November. One interesting chart that I tweeted out yesterday, the day before, I think it was yesterday, was it showed the migration of people from Democrats to conservatives in various demographics, right? So African American people, you've seen a 25-point swing from Democrats to Republicans in the last 4 years. In the last 4 years, from 2020 to 2024, you've seen a 25-point swing in voting intentions to Republicans. Hispanics are pretty close. They're at about 16 to 18% or something like that. What's interesting about the demographics behind this election is that affluent white people, nobody has really changed their minds. They're going to vote for Biden and Trump in equal proportions. But under the surface, minorities are swinging for Trump in a really, really big way. And I think that could tilt the election. I think it could lead to some really big surprises. So, we can all speculate as to why that is, but I think it's pretty interesting.
So you said you don't vote. Why is that?
Well, you can read my Substack on that. I have a Substack called "You Don't Have to Vote."
I will check that out. What are the ramifications of Trump getting reelected, though? Do you think that's gonna be a little chaotic?
Yeah, for sure. From a market standpoint, it could unleash what could be the biggest yield curve steepening trade of all time, right? Because I think Trump has even indicated that he would not keep Powell as chairman of the Federal Reserve. I think Powell will serve 1 year into Trump's potential first term, and then you would have a different chairman of the Fed, which could be Caligula's horse or something like that. And if you have Caligula's horse in charge of the Fed and you start lowering interest rates into this huge expansion, you could have 2s at 2% and 10s at 7 or 8%. It could be a huge steepening. And I think it could be one of the most interesting fixed income trades of all time. The dollar would get a lot weaker. I think it would be fantastic for gold if Trump was elected. So.
All right. So for everyone watching on YouTube, make sure to hit the like button, the subscribe button, the bell, all that good stuff. Jared, it was good talking to you. Also, lastly, if you want to drop a comment down below on potential topics you want us to address in future episodes, we will definitely give those consideration. So thanks, Jared, and I'll talk to you soon.
Thank you.